So let's look at the structure of USD JPY. I normally don't look at some of these pairs, but for the purpose of educational purpose, we randomly look at all the market is doing and to test if market structure actually works or not. And if you look at our structure from there, you see why market reacted here on Thursday 15th and returned on Friday 23 and took away all the highs, in those days. And if I want to be practical about the market, and the best preferred zone to wait for the market will most likely be on this structure here, here, here. Here is the most preferred zone to wait for the market. And that doesn't mean that the price cannot still come down. It can still come down, but this would be the most preferred zone to wait for the market. Yeah, so here was more preferred zone to wait for the market here. So of course, yen sometimes gets a serious flip. You could see that bearish impetus come down here completely. And from what I've seen so far, if you put up a daily trend, you also see there's a break of a daily trend starting from November. We have an ascending trend line, and on a weekly time frame, that ascending trend line has been broken. So it technically calls for retest. So if you get a pullback a little bit as the week opens, it could be a bearish continuation. It could just be. And remember, you're dealing with a currency pair, yen. So shortly after now, we are going to look at some economic dockets to see some of the information coming up from the Bank of Japan to see if we have other data that will swing price back into action. But on technical perspective, what we have here is a strong bearish drop after we have seen that drop. So the worst case scenario we see here is a weekly candle. Assume that is buying back, but you must also bear in mind that the daily candle has already broken out from a November ascending trend line, November '07, November running through January. The ascending trend line has been broken. To put it into perspective, you will see that here we have key support become resistance 1, and we have another support become resistance 2, giving you ascending trend line impetus, and we have a break of structure on daily time frame. So technically, the market will make some kind of fast move, go back and retest this level, and continue to sell from there. Yes. However, we are still in a monthly candle, and so we cannot hold that bias completely accurate. But 157.562 looks promising. So if we get a pushback into that zone, the best area to wait for this on demand floor will be in this zone. So this will be my most preferred demand floor. So this will be the most preferred demand floor here. So on technical, if price pulls back into that structure, I do like to contemplate buy at this level. Yes. And why I love the price action at that level, you see here is a retest after break of structure in the month of October on daily time frame. This is a support structure, and we have two successful resistance structure. RTRS1 resistance becomes support on break of structure 1, resistance becomes support on break of structure 2, and a demand floor RTSR, giving us a descending trend line impetus, breakout of structure, come back here as a retest, and we have seen a buy continuation. And the rejection we had on Friday was a tentative zone that has been tested multiple times. I also want to put into perspective. We have here as resistance structure 1, and we have here as another resistance structure 2, and making it 3 resistance structure, not even 3. We had another one here. If you take away the line chart, and the last one here, so you can see it. So look at it here. So we have here, and the last one on Friday, I was seeing a stronger bearish drop. So what I expect technically is that on a lower time frame, try and keep a sell bias on UJ. So what we're expecting is a potential upswing back to go back to retest a broken um, demand floor, a previous supply roof turned to a demand floor, now turned to a supply roof now. To put it into perspective, it was here resistance structure 1, resistance structure 2, break out of structure, came back here, retest, but now we have a break of structure. So it's going to be like, 2 points, 2.1, that is a 2 resistance structure, 1 demand floor against the current price action. So here you see is a first resistance structure 1, and the second one resistance structure 2. So we have now a break of structure and we have a retest, and now we have a break of a demand flow. That's a 2-1. So if we get a pullback into 157.562, that could be a bearish continuation for UJ. So we are going to watch Bank of Japan economic dockets and also look at Federal Reserve economic dockets to see if there are other informations that could flip the script. However, we've been watching the dollar index drastic fall and the 10-year treasury bond yield performance. So we'll continue to see and put these data together to gather directional bias for the week. So on UJ, stay alert. Wait, if price pulls back into this area of demand on 15 minutes, look for point of entry and take your risk.